Hello, folks. Welcome to the State of the Market. I'm David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Everyone's having a great Monday. One of these interesting sort of periods in the market when I think we have something of a regime change underway, not just in terms of the election, but in terms of leadership in the market. Very interesting to see small technology stocks like Zoom Video jumping today, and then stocks like the semiconductors down. Those are the disclosures I normally show. I shared those. Now I'm going to also show some standardized returns of the ETFs that we're going to be talking about. You can check those out. And I'm going to share a few points, a few things as well in the chat, ETFs disclosures and things like that. Now also remember that we are going to be in Miami. It's hard to believe it's next week at the Crossroads Summit the week before Thanksgiving. Crossroads Summit is sponsored by TradeStation Group, and the website is crossroadssummit.com. There's going to be some really interesting speakers talking about changing trends in the world of business and economics. I'll even be interviewing some of them, so hopefully you can make it November 21st and 22nd. You know, some of them are going to be talking about things, especially like AI and robotics, and a lot of those different changes of things coming forward. You know, I don't know much about it, but I recently was looking at a stock like last week, Ion Q. I don't even know if that's right now, Ionic, maybe. This company, you know, this whole thing of quantum computing, it's early stages, but this idea of having computers that use ionized molecules or atoms instead of circuit boards, where you literally have, you know, ions that are a single atom floating in some kind of special gas that then are, you know, functioning instead of transistors. It's pretty interesting what's happening. So we're going to have some people talking about stuff like that. So there's a lot of interesting things at this event. Just wanted to kind of share with people so they know about it. But as usual, you know, we're going to look at the big indexes first. You know, I actually want to mention first, when I look overall at kind of my view, kind of the state of the market here, look at the S&P 500 hitting, make that a full screen, hitting these new highs, is essentially that, you know, we have now the sort of thing that I've kind of called the uncorrelated stock pickers market. The market goes through periods, it goes through a cycle, high volatility, high correlation, everything crashes together, everything rebounds together. But then after the rebound happens, or after the bullish move happens, we can settle into prolonged periods of stock picking environment with very low volatility. And there's a chance that we're entering a period like that now, when the overall S&P will make small moves. The Qs will make small moves. Possibly even days when the S&P is down like 0.1%, the Qs are down a little bit. And individual stocks like Zoom Video, which is just one on my list, are up double digits. And that's the sort of environment that we're in now. We have this concept of the volatility cycle. And I think it's a useful thing to bear in mind. There's a normal market behavior that's existed for as long as I can remember. And I think right now that could mean that looking at the big indexes is less meaningful than looking for the individual stocks that are hitting highs and having that chase to the upside. That is often the kind of behavior we see in the volatility cycle. So that's kind of the paradigm I'm working with here. And I think it's interesting is that we are seeing a move to some of these smaller stocks, and I'm going to be mentioning those. But one thing I think is really important, we did this article back here. I'm going to share the link as well in the chat. If you go to tradestation.com and you go to the top and you go to, there's a link to insights, and you look back on August 15th. I'm going to share this now, but this is our market trends webinar that we do on Thursdays. But we did in here a table. This table looked at basically the consumer sentiment number, 66% in July of 2024. So if you look back to the last time it was, you know, it's comparable to 1982, when inflation was twice as high, unemployment was twice as high, and consumer sentiment was the same. If you look back to 2005 or 1995, consumer sentiment was in the low to mid 90s, even though inflation at that time, believe it or not, in 2005, inflation was higher than it was in this period, you know, this year, or unemployment was higher than it is now, and sentiment was a third lower. So one of the things that I've been mentioning for a long time in my webinars, a lot of things I've been focusing on, and it's interesting because I saw some interesting commentators. Some of the people online are starting to mention things that I have been talking about for a long time, which is that we have an excessively bearish. We've had an excessively pessimistic mindset in this country, especially since the pandemic. I think there's a lot of sort of emotional reasons and things like that, whatever it might be, coming out of COVID, feelings about the political situation, whatever it might be. People have had a degree of negativity that has not actually been consistent with the data. And I've been saying for a long time that the market we're in right now is like the opposite of 2007, 2008. At that time, everyone felt good, but things were actually terrible. This time, people feel terrible, but things actually are pretty good. And I think right now we're starting to actually see sentiment catch up with that reality. And to me, that is probably the single most important thing right now that's happening. So I think when we look at it in time, we have to see here that there's a huge amount of cash on the sidelines. There is not a lot of leverage in the market. And that creates the environment for money continuing to enter stocks. Now, the question is, overall multiples of the S&P are relatively high historically. There is some upward pressure on yields that may or may not abate, and that's one of my concerns. However, I think it's also important to realize that money might leave the large mega cap companies S&P 500 and migrate into these other sort of areas, these smaller sort of stocks. I think it's important to realize if you look back, I'm just going to go ahead and show it now. Look at a stock like Zoom Video. This is having this really violent move here, but a lot of these are stocks that had this crazy rally during COVID. They got slammed really hard, and now they are, only now going back to where they were during COVID. Zoom was one of those. Another one is a name like I mentioned them actually. If you look here on my blog, in this article today, I actually go through several of these companies. Money floods back into stocks. So I want to just mention this because this pattern has popped up in a few of these companies, Palantir, Axon, but in particular, all right, AppLovin, Doximity, look at this. APP had this big rally right back here. Well, hit this peak. November 2021 was kind of like the peak of a tech bubble. Now, took that beating, and what happened? It just now broke out back above that level. Look at Palantir, same thing. People forget Palantir has only now broken out to new highs. It's been running, but it basically got it just really hammered during this kind of, this tech bear market we had. There's other names like that. Another one here was Doximity DOCS. I mean, another stock. Look where it was back in 2021. So what's interesting here is what we're seeing. Look at the Russell, which is one we talk about in this webinar a lot. The Russell now, these things are playing catch up to where they were in 2021. So I think right now, it's not just a question of the S&P hitting new highs or other, sectors hitting new highs. It's a question in many ways of things that were dead, and have not participated for the last 12 to 18 months or 24 months are now playing catch up. And I think that's really the way to think about the price action we're seeing in the market right now. That's the kind of behavior that we're seeing. So if I get back now, actually, last thing I want to mention very quickly, I'm going to go over my daily chart here. Arista Networks. This company had, a mediocre earnings report, but here it is. Basically, we had done a trading view idea on it as it broke. Where did we do it? No, that was the other one. We haven't talked about this one in a while, but we've covered this one different times. I wanted to just mention it because there's an earnings report right here. Kind of broke lower. The earnings were the kind of classic tech stock. Earnings were good. Guidance was conservative. You'll often see with stocks like this, what can happen is they just kind of take a pause for a period of 2 to 3 weeks, and then they kind of bottom out when no one's paying attention to them, and then people step in, and it's a question of trend following. So I want to point that out now for something like Arista Networks. This is interesting to me because if you look here right around this level, this low from back here on October 15th, this low from late October, people might be looking for something like that to be a potential support area. You can see here that there was a lot of support across here. And this is one that was just, potentially you could say support at that area because you have essentially these lows and you have this consolidation zone here. You have the 50-day moving average catching up. So this was one that just jumped up on my list. I'm always looking for different sort of, chart setups and things like that for some of the work I do. And this was one that popped up for me, and I wanted to share it with you guys. We normally look at the big indexes, but I have to just kind of hit on these individual names because, like I said, this is kind of my view of the state of the market now. The state of the market now is the individual sort of names, the stock picking environment, and less of the index based outperformance. So turning to the S&P 500 here, to me, the big thing is obviously, the breakout towards 6,000 is a major event. And, when you get a breakout like this, in many ways, looking for a retest of the old highs actually is not always something that you're going to see in the near term. So the thing we're often going to see in an environment like this, or historically we might often see, is something like a pullback to one of the recent lows. And if you look at the market, we've looked overall at times for the market to form these tight consolidation patterns when it basically moves sideways for a period of time, like this, and then you get more upside. There's several patterns like this historically we've highlighted. And, when you see this kind of behavior, what we might actually see is chop down to, modest pullbacks, sideways movement, and then another tight sideways period to form, something like the 10-day moving average or the 8-day exponential to catch up, and then continuation to the upside. So this right here is something that kind of might be the kind of the framework people might want to have on it. This is now what the, this is a 5th day up. Tomorrow is Tuesday. People like the concept of turnaround Tuesday and things like that. Tuesday is about an exact week from the market starting to rally on election day. So I think that's also something you just might think about. But I think at this point we have to realize is that we still have this underlying situation of money being frozen in this kind of just like this fear bubble that is now melting. And so from my perspective here, the area people might be looking to is kind of the low back there on Thursday of last week. Looking back to these other lows, when you have a thrust of this strength, looking for a pullback to the old high or this kind of low on Wednesday of last week, that might be a little too greedy for people in terms of looking for the pullback. So I want to mention that. Now, that's the S&P. The Qs are very much in a similar sort of thing here where I think it's more going to be a question of looking for a day or two down. And, the area that maybe jumps up on here is this sort of gap between Wednesday and Thursday. But I think right here we have to realize that something like the Qs, this is going to be something where this is the dominant part of the market, these large caps. And there seems to be a shift now to these other kind of smaller names, these kind of more, higher beta, more speculative. The people used to call them the longer dated sort of equities, things like, the different kinds of stocks that maybe have higher multiples, the kind of stocks you like Kathy Wood talk about. And in that environment, the mega cap stocks are also not necessarily as much of an area field look. So from my view here, this is something where people will probably look for this to kind of drift higher, kind of drift, stall, have one or two, maybe like a day when it goes down like 0.5%, 0.8%, and it's like, oh, you have this little spike of fear, and then there's that kind of buying opportunity. So from my perspective here, something like the Qs here are in a spot where they're pretty extended, and it's not really where the real alpha is going to be, the real outperformance in the large caps. So it could be something where people simply want to be viewing it as an index where if it hits, it's still in the uptrend, but if it hits that oversold kind of intraday level, that could be something for kind of small sort of opportunities. This is something that continues to signal overall bullishness in the overall market, but it doesn't mean that the outperformance will actually be in the Qs. As counterintuitive as that might seem, just because the fact that it has a bullish setup doesn't mean it will lead the market anymore. Now, the Dow basically went down and held these levels. And this is something also, I think we have a similar sort of setup where the weekly chart is going to give us less meaning, less kind of fewer real signals on the in terms of levels at this point in time. From my perspective, there's something also where it's more of a situation where people might simply be looking for, all right, we're up multiple days, period of weakness. I'd say here, period of weakness might just be a day or two down. People look. The level that does appear to me here that's kind of interesting here is this level around 43,700-ish, 715. That's basically a high, kind of this this kind of little tight candle right there on Thursday of last week. So that might be a level people look toward. But also in this environment right now, the Dow is something that kind of like the Qs might kind of stop making significant moves. Now, the Russell has that breakout that people have been kind of waiting for a long time. And now, in many ways, that old high from late 2021 is very much, I think, going to be on people's minds. So, this is one for me here that when we look at this, once it hits that level, then the question is going to be, if we can look out to this week, what do we have this week? We're going to have CPI later this week. We're going to have a speech by Jerome Powell. We're going to have PPI. So we have some things like that. I do think we have to realize, I mean, I continue to have this kind of worry about treasuries because we do have this idea. I mean, this is not a period of time when we have a 1%, deficit. We have a huge fiscal deficit at this point in time. And if you throw together tariffs and fiscal deficit, those things can be problematic because if you tell the countries we don't want to buy your stuff, then it means they're not going to be there to buy our treasuries. So these things together, it creates a risk. And I'm not going to say that it's a huge risk, but it's something we have to bear in mind. And I think the market does kind of has this kind of anxiety about what we've seen with treasury yields moving higher. So the thing that's important to realize, I think, is if treasury yields do make a sustained run toward 5%, that becomes potentially a problem for the Russell. And there has been this relationship between lower rates and the Russell, and I think that's just something that is out there. So for me, looking at this falling trend line, this level at 4.324 on the 10-year, looking at TNX, we've talked about this for over a year now, and it has been a very important level. And I think right now, the simple question is, we have this falling trend line, we have this flat line. Do we break out to new highs? With the government looking to have increased spending and things like that, in my view, this does remain something of a risk. And so this is now just something that this is something that if we get a clear break through this level, the desire to kind of chase the market might not be there. So this is just something we have to monitor. And I think the key thing is we have CPI this week. We have Powell speaking this week, and those could be important catalysts for that. CPI is on Wednesday morning. Powell is speaking on Thursday. I think he's speaking at 3 o'clock Eastern on Thursday. You want to look at a calendar on that. We actually have it in our article. If you look at this thing, money floods back to stocks. We do actually mention it down here. 3 p.m. Eastern time. I should say Eastern time there, even though he's in Dallas. So that was the TNX. But like I said, this is something that does have the potential to cause greater sort of problems in the market, and that's why it simply needs to be watched. In an environment like this, there's this great desire. The market will, from a trading perspective, the market will try and play games with your head and make you be fearful when it's rallying and not be involved. So I think right now, we need to really see a confirmation. We need to see some kind of stronger break above this trend line or even maybe above the high from April before we really give credence to that. But I do want to just mention that because actually I'm not going to be doing this webinar this week. I won't be back until December. So I want to just put out those kind of important points. Next week, we're going to be in Miami for the event, and the week after that is Thanksgiving. So then we're back in December. So I want to just lay out these points to you guys. So now materials is one that we've been watching, is kind of trying to hold this level. And in my view here, this is something where this is not where market sentiment is right now. I think that this has the potential to be active at a certain point in time, but it can also sit and kind of hold this level for a while. The dollar has been very strong. So I think we have to just kind of watch this and realize that right now, investors are engaged in other parts of the market, like these small growth stocks, and they're not engaged right now in materials. And there is some risk here of this turning into a false breakout. So right now, materials, I'm watching this price zone and trying to see how it behaves. And we want to, I think, from my perspective, this something it's in kind of watch and see mode. The fact that it's not hitting new highs in the broader market is a little bit of a negative thing. It's a cyclical thing, but the cyclical trade has focused instead on industrials and financials and not this. Now, XLC, we've talked a lot about how this one in many ways had the strongest communications ETF, had the strongest overall weekly pattern, and it has kind of lived up to those expectations here. From my perspective, when something kind of has a move like this, the way to often think about it is if it gets 1 or 2 days down, looking at the daily, something if there's a clear level where in this case, even, looking at this like kind of level on 95.86 or potentially down kind of toward 95, 95 and a half even into this sort of gap, you know, things like this have a tendency to kind of, they have this move, they stagger a little, and then they kind of have 1 or 2 days down. Like, see, look at the price action here, rallies up, drifts, and you get these candles down. You see these like this tail right here on this day back on like September 24th, for example. This is the kind of opportunity people might see. They see it hitting that, they see, all right, here was the low 3 days ago. Maybe look for a test of that level, a limit order near there, and then an entry. So when people look at something like this, a sideways movement, kind of being aware of the bottom of that intraday range, and then people might be just looking to enter at those kind of levels. But again, this is a large mega cap theme sector at this point in time, and it might just be at a point here when the big movements have maybe for now kind of paused. Energy, to me, this remains one that we've, on one hand, people want to be bullish on energy because they think Trump is going to support the energy sector. And that, there's obviously something he has said. However, in some ways, be careful what you wish for, because the cure to high oil prices is high oil prices, or however you want to view it. And so the thing is yeah, if Trump supports more domestic drilling, then how is that good for oil? And I think the other thing is we have to remember that it was under Trump that energy prices really took a beating. The energy sector did not do well because the increased production, led to a huge supply glut. So from my view here, this level we've watched up around 94 remains, something to think about as resistance. And that might be something people want to see. Does this resistance kind of remain in place? And do we actually see at this point in time, if this level remains as resistance, in the coming days, even late in this week, it might actually turn into an opportunity for people to look for a move to the downside. Now, financials here are kind of similar to something like communications, where something like a short kind of weakness for a couple of days, I mean, new all-time high today, but same sort of thing where people looking for small test downs. Well, that will probably be the sort of strategy a lot of people might be looking to have for any kind of entries in this. Even looking for these kind of like this range here around like kind of 49 and a half, things like that. Small kind of test downs. When things are broken out and they run, they don't pull back very much. And looking for those very tight 3 to 5 day sort of levels is often what you're going to get. Now, on the XLI, it's almost very similar. People might be looking just for moves here down to like 142, kind of, a period here of see this consolidation get a new high, but then you basically had the levels from that day tested the next 2 days. So maybe now people look for this level to kind of be in effect for a couple of days, and then maybe more upside after that. Now, XLK here, in some ways, XLK, the technology ETF, is actually kind of interesting for its bearishness. I think one thing that's really interesting here is that semiconductors have now kind of, they've kind of lost their leadership, I think. So if you look here at SOX, the Philadelphia Semiconductor Index, this is just stuck. Now, we do have NVIDIA earnings coming up not that far long off from now, but right here we have something that is in a spot where it's not hitting new highs when the rest of the market is. We have the geopolitical risk of China and all that sort of stuff with semiconductors. It hasn't made a new high, since July. So from my perspective here, this is something that actually becomes a problem for XLK and for the overall technology sector. Remember, a lot of these companies that are the so-called Cathie Wood stocks are actually not tech stocks. Things like Zoom Video, things like Roku, things like Tesla. Tesla's a consumer discretionary. It's not a tech stock. So I think with the strength we've seen in technology, we have to realize is that in many ways, the actual tech sector, NVIDIA, Apple, Microsoft, those are the three big ones. NVIDIA reports earnings. That one has had a lot of strength. But then Apple faces I mean, I don't really know what kind of political risk does Apple face right now when you think about it. I mean, I would be kind of potentially seeing some risk there of things like, oh, this tariff talk and all the other things. When you look at Apple, there have been a lot of mixed sort of news about how great of an uptake it's had with the new phones and everything, and how quickly that's going to happen. And then the other thing is, something like Microsoft, those earnings were so, and the overall valuation of that stock you'll view is pretty high. So I think we have to realize here, something like XLK at this point in time has not broken out when the rest of the market has. It's been a leader for a long time, and there is some narrative that would potentially point in another direction. Another thing to realize about it is if we're in a cyclical economic growth cycle, when financials are doing well and industrials are doing well and people are going out and feeling good about America again and consumer sentiment goes up. By the way, last week, consumer sentiment went to its highest level in a year, and that was right before the election. There's a chance that we're going to see a significant increase in consumer sentiment. And if that happens, does that boost traditional retail stocks? If it does, do we see a redeployment of capital from the mega cap tech, Apple, Microsoft, Nvidia? Does that money shift from there to stocks that are going to benefit from a traditional retail, consumer discretionary, cyclical American economy cycle? Tech is not enormously cyclical. It's much more of a secular area. And I think people are thinking that, and it's something that is something of a potential to think about when we look at a chart like this that is stuck below its old highs. I mean, this to me, people might look and say, you know, a double top could be forming on XLK. Just not, I'm just saying, I mean, this is something that is out there to think about. So XLK, consumer staples here, trying to kind of hold this level with this downtrend in effect. I think we have to just kind of see, do we get any evidence of this these are consumer staples. Does it stabilize and hold this level and kind of get on the other side of this trend line and then have some acceleration? Or do people just kind of keep punishing it down through here? That's, I think, kind of the way to kind of be viewing that. This trend line for now seems to be directing it, and that might be something that remains in effect. Real estate is kind of the same way. XLRE, I think this downward channel, we have to see, does it turn into a bullish flag or does it turn into the beginning of a sell-off? And I think, again, the 10-year treasury will tell us those things. Utilities, same sort of thing. We had said last week we get a dive down below kind of 77. This has been a strong sector. It's been the surprise leading sector in the market. And I think now it's kind of chopping in this area, but it also is going to have that risk to something like, the interest rate environment. So at this point, it kind of held that level. And unless rates do, go shooting higher in the near term, this might be something where if we have an inflation number this week that is not scary and yields do make a stronger break to the downside, something like utilities might be an area where people actually look for a momentum into year end. So I think we want to see, does the 10-year get above this kind of 4.5, 4.48 area? Today's actually Veterans Day. Happy Veterans Day to you guys out there. So the bond market is actually not open. So that's the reason why this doesn't actually have a yield on there. All right. But anyway, my point is, I think XLU here, it held that level. It held the level that we had kind of anticipated as potential key area. It's had a nice, decent pullback since the beginning of September here. The new highs now it's kind of back holding those levels. So at this point, this might actually be something where if we have moderation on rates into year end, it might actually get some window dressing. Healthcare at this point is kind of like consumer staples. It's kind of sitting here. You can see that it has something of a trend line coming down. And then I think the question is, can it get on the other side of that trend line? Or does it just keep languishing down through these areas? Now, consumer discretionaries have hit the 215 level that we had kind of indicated in previous weeks we've been pointing to. This also is something that people will maybe think about kind of like, like we had said about financials or industrials or the communications, where you want to look, potentially people might look on the daily chart much more for XLY and just kind of look to say, all right, wow, I'm not even sure what to make of this one. It's run so much, and there's so much emotion right now with with Elon Musk, and that's a big one, because Tesla being a big one in here. My view here maybe is that maybe people are going to be aware of these old highs. But this is an area also where I think we have to realize consumer sentiment is there's a chance, like we showed that table earlier. There's a chance here the consumer sentiment is making a swing back in a positive direction. We start with the data last week. We mentioned how the fact that consumer sentiment is abnormally low given the economic backdrop. And if we do see an enthusiasm on the consumer side, then the consumer discretionary stocks, even if Tesla takes a break, you have in there cruise lines, you have retailers, you have travel stocks are a big name in there. We talked about stocks like Expedia, things like these cruise lines. These are consumer discretionaries. Also, there's home builder exposure. It's kind of a confusing thing, but I think we have to realize is that if that consumer sentiment swings in a positive direction, the consumer discretionaries could be a logical place people look here. So, maybe the thing to bear in mind is just that 215 level. All right. So, I actually want to mention I am going to have to be canceling my market trends on Thursday. So, I'm going to be back with you guys to see you in December. It's great to see everyone. Hope you can make it to Crossroads and hope everyone has a great Thanksgiving and a great rest of November. Take care.